Welcome to Strategy Saturday. I'm Charles Crillo. Today we're breaking down when to renovate units and when not to. We'll talk about the 36-month payback rule, how to use rent comps effectively, why testing different renovation levels matters, and when a simple paint and fixture upgrade can outperform a full renovation. Let's get started. Renovations are one of the fastest ways for apartment owners to boost their net operating income and property value, but they can also erode your returns if you over-renovate or if you misjudge the timing of your renovations. The key is understanding when and how much to renovate. So let's break down a few strategies our company uses. Number one, the renovation payback period. We normally use a 36-month payback period on any renovations. This means that if the renovation costs $3,600, we want to make sure we can increase the rent on this unit by at least $100 per month so we are paid back within the 3-year window. Seems simple, right? But if the rent comps you're using or your renovation budget is incorrect, which has happened to me before, this formula is thrown off. Make sure to use several nearby rent comps with properties that are similar to yours. And when it comes to the renovation budget, speak to a couple of contractors, especially if the one who has given you a quote has never worked for you before. From other episodes I've done, I've mentioned that our payback period was a range of 36 to 48 months. Now, shooting for a 36-month payback is best. If your numbers are slightly off, you will still make the 48-month payback, but you want to avoid payback periods of 5 to 7 years. The only time I would use a 48-month payback off the bat is if the area is gentrifying really fast. We want to catch up to the market with our renovations, not leapfrog it with new renovations that have not been tested. Number two, renovating units on the turn. As units turn, this is where we want to perform our renovations. There are no tenant disruptions, and you can dramatically raise rents without upsetting a current tenant. Number three, testing unit demand. When you are turning units, there is no need to fully renovate every unit. Test different unit upgrades and renovations. We usually have 2 to 3 different finishing levels we are testing. A simple clean paint and hardware fixture upgrade, maybe one where we are also changing the flooring, maybe upgrading bathrooms, and a third where we are fully renovating the entire unit. Test how long it takes to rent the units, what the rent increases were versus the cost of renovations, and see which rents fastest and has the fastest payback period, and start doing more of those unit renovations. It's all testing. A simple clean paint and fixture upgrade will normally yield the best returns in most markets during an economic pullback, while if new professionals are moving in and looking for upgraded units, a full renovation might rent the fastest if few of your direct competitors are not performing these upgrades. One important caveat with renovating and upgrading units is that we do not do this until all the deferred maintenance has been corrected. Leaking roofs, plumbing issues, HVAC problems are all corrected before we start upgrading. We also want to make sure our management issues are under control. If we are planning to switch management companies, are we experiencing high delinquency, or we're experiencing maintenance issues, we will correct this before we start upgrading units. One of the key takeaways to renovating units is not to renovate units for beauty or vanity, but only renovate them for yield. Using several nearby comparable rent comps and verifying that you can be paid back within 36 months is always a safe bet for the level of renovation a unit deserves. If you want to learn more about minor renovations that add a lot of value, check out episode SS219. That's SS219. I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then. Have you always wanted to invest in real estate but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.